Welcome to Buy, Hold, Sell, brought to you by Livewire Markets. My name is Vishal Teckchandani, and this episode is all about you. We're going to talk about 5 stocks that Livewire readers have requested the fundies to cover. Joining me on the show today is Matt Williams from Airlie Funds Management and Sean Fenton from Sage Capital. Sean, let's kick off with you. Wesfarmers on a PE of 23, 3.5% fully franked dividend yield. Buy, hold, sell.
For us, it's a hold. Pretty solid business. Bunnings is doing really well, as is Officeworks, catch of the day. They've got some other businesses there, Kmart and Target, that have probably struggled around a little bit more. Probably pretty appropriately priced. So for us, it's a hold.
Matt, I've never had to queue outside Officeworks before. A sign of the times. Buy, hold, sell. Wesfarmers.
Yeah, Wesfarmers is a buy. Bunnings is the best business in Australia. 3.5% dividend yield with a balance sheet that Wesfarmers has. Basically no net debt almost, and so they are well placed to either give money back to shareholders or make a really good acquisition.
Okay, next stop is Beach Petroleum. What a cracking turnaround this company has had since 2016, and before the oil price collapse, this company actually set record highs. Buy, hold, sell on Beach.
I think at the current levels it's a buy. I think they're well placed. With the mix of business that they have, some contracted business that's going to keep them in good stead no matter what happens to the oil price, which is too hard to guess. So I think it's a buy.
Okay, Sean, it pays out a 1.5% dividend yield. It's got $50 million of net cash. It's growing its 2P reserve. What's not to like? Buy, hold, sell on Beach.
I'd actually go sell on Beach. It's disappointed a little bit in terms of recent production guidance. They've been spending a lot of money in terms of development that hasn't really flown through to the same extent in terms of reserves. So yeah, for us, there's better value in the energy sector elsewhere.
Okay, next stop, CSL. No intro needed. Buy, hold, sell.
CSL's a buy, just great quality business that just continues to deliver. They've got a broad product suite across blood fractionation. Have been interrupted a little bit by COVID in terms of collection centres, but that's temporary. It'll rebound, continue to grow strongly.
Okay, do you agree with that, Matt? Will it rebound?
I think it will rebound. I'm a hold at the moment, but I'll be looking to buy it on any significant sort of fall. That's right. COVID has provided a bit of a hiccup, and I think it could last for a little bit longer as the plasma collections need to ramp up again. So it's a hold.
Okay. Next stop is Coca-Cola. PE of 21, 4% unfranked yield. Buy, hold, sell.
Look, I'd say it's a hold. Coca-Cola's struggled to grow profits really meaningfully for years, and it's having a reasonable COVID bounce, if that's a term. I'm not sure it's going to last. So I'll say hold.
It's had a decent COVID bounce, but is the rally going to fizzle? Buy, hold, sell Coca-Cola.
I'll stick with a buy on Coca-Cola. I think it's got a little bit more to go. They've done a good job diversifying away from traditional Coke, broader product suite, no sugar, water and the like. But ultimately it's the rebound into pubs and clubs as they reopen, which are much higher margin channels than supermarkets. So it's that margin rebound that we'll see on reopening that will keep driving Coke.
Okay, and the last reader request, Sean, is A2 Milk. Share price has been smashed 30% in the last 3 months because of what's happened in Victoria, impacted one of their sales channels. But is this an opportunity to buy a good quality business at a good price? Buy, hold, sell.
I actually leave A2 as a sell. The red flag for us there is last year the Chinese government said they wanted more domestic involvement in infant milk formula in China, and that's been happening. So you've got local players starting to take share there, and A2 trying to continue to grow in China's got to push down to Mubs and Bubs stores into Tier 4 cities, lower margin, more cost intensive. So seen its best days.
Right. Has it seen its best days? Do you agree? Buy, hold, sell on A2.
I think it's a buy, so I'm not so sure on that. I think that the growth potential is still pretty good, and the fact that it has fallen such a big way. The red flag for me is the insider selling. The big insider selling. I think that's a bad look. But I'm going to stick my neck out and say $14 was $19, now $14. It's a buy.
Okay. Well, that's the last episode of Buy, Hold, Sell from me for this year. I hope you enjoyed my cheesy jokes because I had a bloody pun time.